Holding steady here, S&P's up 11. Let's get to Bob Pisani. Morning, Bob.
Good morning, guys. The outlaw Josie Wales. I love the Clint Eastwood reference that Jim threw in there. You know, we've been positive all morning on the S&P, and that's because that ECI number came in, all right, still too high, but a little better than expected. At least inflation's moving in the right direction. Take a look at the sectors. Kind of a mixed picture at the open. So you want to look at the stuff that moves every day. ARC Innovation, Van Eck, kind of flattish. ARC's up positive now. Consumer discretionary's done well. We had Pulte and GM. That really helped the consumer discretionary. You see energy down, but that's kind of oil, I think. Oil's 77, just top 78. It's been down 3 days in a row, so a little pressure on the energy stocks. The earnings are kind of all over the place, as you can see today. Some of the numbers are okay. GM's been great. UPS is doing great. Whirlpool was very interesting in their guidance. We'll get to that in a minute. And you see Cat and Exxon kind of weighing on things right now. The important thing, I think, is the revenues. Now, you hear a lot about raising prices, and that's true. Some are doing a lot better, but not all of them. So Cat, GM, Marathon, McDonald's, Pulte, their earnings were, their revenues, were above expectations. These are revenues. And below expectations, though, UPS, Exxon, and Whirlpool. So it's a little bit of a mixed bag. Just look at the companies that reported. We got about 30% of the S&P reporting, 65% reporting revenues above expectations. That's not far from the average. But the beat is very small. They're not beating very much. And this is the same with earnings, too. They're not beating by very much. 0.6% on revenue beats. 2.5% is what we've been doing in the last year. So the numbers are up, but they're not beating impressively here. As for where we are on the earnings situation, everybody's hiding in the second half. Every single day, first quarter and second quarter earnings estimates keep coming down. You see 1.8 down, 2.3. Every day these go lower. The fourth quarter, people are kind of holding on around 10% right now. So if you want to see a very good example of people hiding out in the second half of the year, did you see what Whirlpool did? Now, they had an earnings beat and the revenues missed. But look at this guidance, $16 to $18. Wow, the street's at $16, $16.19. So you're talking about 12% above the guidance overall. That's pretty darn good here. How are they going to do that? Well, they're expecting lower costs, but they're expecting, more importantly, a demand recovery in the second half of the year. In other words, this is based on a lot of hopium in the second half of the year that suddenly demand is going to rematerialize. We'll see, but you get the point. Hiding out in the second half of the year. As for the end of the month, well, it's the January barometer, folks, and we're positive. We're going to be up about 5% so far. And Carl, you know that January barometer, as goes January, so goes the year. It is the tendency for the January S&P performance to mirror the full year performance. It's got a decent track record, and right now up close to 5% for the month. Carl, back to you.